So Bitcoin fits in with this theme. And I want to equate, because I get a lot of outreach from people. So Bitcoin's been kind of stuck here for a period of time. I've said repeatedly that for me, Bitcoin is the purest AI trade, as AI goes through the complete disruption of all businesses. And the only moat that's left at the end of the day is a store of value that is in the digital economy. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect Bitcoin to go down. It's not just Bitcoin, it's Solana, it's Ethereum. There's been a lot of speculation in the Bitcoin miners. I think we just reached a point where, again, we've sold off. The AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for Bitcoin to have corrections. And I just want to remind people, NVIDIA's up over 1,000% since ChatGPT's launch. During that time period, which is less than 3 years, we're almost at the 3-year anniversary of ChatGPT's launch. You've had 5 corrections of 20% or more in NVIDIA before it went back up to all-time highs. Bitcoin's going to be the same thing. So you can take NVIDIA, you can take Bitcoin, you can kind of put them together as there. And I think people should start realizing that is the reality, is that we're in a situation right now where, as NVIDIA goes, as the AI trade goes, Bitcoin to some degree is going to be part of that as well.
How do you think about NVIDIA and all these other AI companies and Bitcoin as well, but using traditional metrics? So obviously people generally try to value companies on a PE ratio basis and all these other things. Can you do that in the AI trades? Or is it too much? Is it a bubble? Like what are we doing and how do we evaluate these companies?
First of all, NVIDIA and almost all semiconductors, in my opinion, are way too cheap based on where earnings will be 2-3 years from now. One of the hard things about valuing companies is the growth rate that you're going to see. What NVIDIA proved to be up 1,000% and still have PEs being too cheap 3 years from now is that their earnings grew rapidly. And the only way your earnings grow that rapidly is to have exponential growth. Exponential growth is what is driving AI. So I think the problem is for people, it's really hard for the human brain to comprehend something that's never happened before in time. There's never been a $4 trillion company on its way to 10 trillion. There's never been the kind of growth that we've seen from a company, because eventually the law of diminishing returns does kick in historically. That's not the case now. So I think this week in particular, we started getting the chatter that, NVIDIA is just like Cisco back in 1999 to 2000. This is not even close to the same thing, in my opinion, because of where AI is, which is still in the very, very early innings. We still have a demand greater than supply problem that is evident, and anyone can tell you that. But if the sell side street isn't doing it, if X isn't doing it, just go ask ChatGPT, what are the signs that would happen when the supply of GPUs is greater than the demand? You wouldn't be using VO3 for 8 seconds and then be cut off. ChatGPT wouldn't have a governor on deep research the way it does now relative to what it was 3 months ago. I could go on and on. There wouldn't be bottlenecks in high bandwidth memory in terms of microns reporting. Everything would be different. And this is all in front of humanoids. This is all in front of robo-taxis. This is all in front of the next stage of AI. So I just think for people that are going through this, remember, exponential growth, which is what we're seeing, means exponential changes in certain companies' businesses that are tied to AI. And if you don't want exponential growth or you want to fade something, go fade forward. Well, this continues the path that we've seen. I mean, I think, let me put it this way. If we take the merging between AI and Bitcoin mining, this has been a big year for it. First of all, the whole CoreWeave thing, when it came out, kind of got a little bit of enthusiasm. It was followed up by Circle in terms of the stablecoin side. But I think over the course of the last 6 weeks, we finally got the traditional finance people looking at the relationship between all electricity, all power, and kind of where the Bitcoin miners fit into this and this linkage between this. I do want to say this again and again and again. The world is built on code. If there's one thing that Jensen Huang did say that gets back to your emerging market side, which I think is important into the Bitcoin miner, the whole relationship and how these guys are looking for any capacity they can find. Jensen Huang said, this is the ability for kind of taking companies that had a huge advantage and allowing any person in the world to have the same superpower. And that superpower is to turn an idea into an application that can make money. So any child who can speak the English language and come up with an idea can speak into a phone and have an app built. They can connect Stripe to it and they can start collecting revenue on it if it's a good idea. They have to figure ways to promote it. All of this stuff can now be done because coding has become ubiquitous. And I think that gets important to Bitcoin miners, the relationship with AI. It's all code. At the end of the day, we're merging the digital economy. And this is the reason why I started to go with there's the macro world. There's the AI world, which is basically dominating the macro world through GDP, through labor, through everything. And then you've got Bitcoin over here, which is the eventuality. And the eventuality is AI is going to disrupt everything in the traditional finance world slowly, but continuously. Well, so far this month, I think as of yesterday, even with Bitcoin being down where it was, I think it's still flattish for the month. Mm-hmm. I think stocks are up for the month. So I'm not sure September is going to finish down for the month. But I do think as we get through kind of the shutdown fears, which are now starting to percolate a little bit more, and for people who, we haven't really been together on this weekly during a real shutdown, there's got to be at least a 30-40% chance of a 1 week to longer shutdown in the government, just based on how polarized things are. A lot of times this thing gets solved right at the very end, so I wouldn't be surprised. But historically, it just doesn't matter for markets, but the fear factor's there. I think the more important event is happening at the end of October, and this is where I would expect that people are going to start to get more positive. The first thing is we still have the possibility of another Fed rate cut. The economy is fine. We just came out with a GDP of 3.8%, and now the GDP now is above 3.3, and that was before the personal spending numbers came out better than expected today. At the end of the month, Donald Trump will be headed out to the APEC summit. President Xi will be at the APEC summit. I believe that China and the U.S. are headed towards a deal, a structure that will allow them to be working together and not decoupling. I still think people believe decoupling is a possibility. And I think there's a chance here that a deal between China and the U.S. would get rid of hostility fears that are out there and kind of get people to resolve that maybe for the next few years of Donald Trump's presidency, China and the U.S. will coexist, as I've said, in mediation before divorce that'll happen at some point. But that just means the world can grow and we don't have to worry about kind of tail risks that would come through. I think that would be a trigger point in the next catalyst for the market as we go into the final couple months of the year.